everyone. My name is Chris Brummer, and I'm a law professor over at Georgetown University Law Center in Washington, D.C., and I'm the host of the Fintech Beat podcast. It's a pleasure to be here with you to have a deep dive on regulation with Raphael Bostic, who became the 15th president of the Federal Reserve Bank of Atlanta on June 5th, 2017. And he is one of the leading lights in conversations on financial regulation and obviously the oversight of our nation's financial system. Now, but before coming to the bank, Raphael was a professor of public policy at the University of Southern California in Los Angeles, and he brings a wealth of experience from really an outstanding career in academia, government, and research. He served as the Assistant Secretary for Policy Development and Research at the Department of Housing and Urban Development, and he's also spent several years as an economist at the Fed. Now, Raphael has published, again, extensively, something that's near and dear to my heart as an academic, but he's also been on the front lines thinking through payments, thinking through fintech, and trying to really weave a discourse and a conversation pinpointing issues relating to the safety in payments innovation. And his efforts have included really frontline, fascinating interactions, partnering with financial technology companies in the 6th District involving payments. And with that said, he's just been a fascinating person to watch. He's a delightful economist. Yes, that is possible. and really a leader, again, in an array of just critical conversations. So with that, Mr. Bostic has allowed me to call him Raphael. And so, Raphael, thank you so much for joining me in this conversation.
It's a pleasure, Chris, if you don't mind me calling you Chris and not Professor Brummer. It's really good to be here, and good afternoon, everyone. I'm really pleased that I have a chance to talk to you and to talk about fintech and its important role in what's happening in payments and in the banking system. In our bank, we spend so much time thinking about how do people get access to the financial system and what things might the private sector and innovators do to try to make that easier and safer and more secure, because that's a mission that we've had for a long time. And we want to make sure that as we innovate, we don't lose some of the things that so many customers have come to expect. I talk a lot about the fact that when people do payments, they just expect it to work. And they don't actually think there's a hardware and infrastructure behind it. And I'm really pleased that our bank has played a critical role in that. And so I want to definitely take every opportunity I have to get in front of you to talk about the things that we're thinking about, but also to start a dialogue and continue that dialogue as we move forward. So, Chris, it's really a pleasure to be here.
This is great. When you're talking about that back office sort of element to our payments system, well, it's something that you just don't build one overnight. And I know that you and your fellow regional Federal Reserve banks have announced really a range of research projects and other undertakings relating to fintech. Maybe you can just walk us through, the Atlanta Fed's focus when it comes to fintech, and maybe how that's reflected in some of those research related projects.
Well, as you noted, this isn't something that just started overnight. The Fed has been involved in payments since its very beginning, since 1913, when part of our function, our origins, was to try to drive more efficient check clearing between banks. And we've been since then in a role to really promote as much innovation and as much efficient working of payment systems as possible. Atlanta, as a bank, took over the retail payments function maybe 25 years ago. And as such, we've been a focal point for those sorts of thinking and that sort of activity. And more recently, one thing that we've noticed, and you guys, I don't have to tell you this, there's been an enormous amount of innovation in the space. And what we realized was that it's really important that we, as the representative of the Federal Reserve System, or as a representative, really take a role to try to understand what is happening in that space and engage with all of you. So about 2.5 years ago, we embarked on a research agenda oriented in large part around safer innovation in payments, to make sure that as we engage and as we see innovations happening in the payment system, we make sure there's an appropriate focus on risks that may be introduced. I know a lot of folks who innovate and who view themselves entrepreneurs, and a lot of times when they talk a lot about how neat their tool is and how it's going to allow people to do all these new things. And too often, when the conversation turns to risk, they have much less to say. And I want to make sure that as we see innovations increasingly be introduced in the payment space, that risk is something that is forefront in every innovator's mind and every entrepreneur's mind, so that we can move forward and keep the payment system secure and resilient.
That's really interesting, just sort of listening to that answer, because what you're really highlighting is not only whether or not you're getting this upside on innovation and whether or not the ultimate tool is safe, but really whether or not the process of innovation is safe and leads to outcomes that I guess are good for everyone. When you think about the notion of fintech and safer payments innovation, and not just safer payments, but safer payments innovation, do you have any thoughts about sort of that process as it relates to your initiative, in terms of how do you get from A to B, from the concept of a tool that may have some good, but sort of thinking through the safety and soundness of the process of coming up with and designing that tool for purposes of innovation?
Sure. So, usually when people hear about safety and tech, they're thinking about things like cyber and those sorts of activities. And certainly that's important. And we want to make sure that the systems that are introduced do keep people and their information and their resources quite safe. I actually think about it in some other ways as well. So one way is really we want innovation to definitely provide access to people in new ways, so that they can access all the services that are available in the financial system, but also to make sure that we're not introducing extra burdens or extra harm on people who might want to participate in the financial service system, or maybe already are. Just recently, we released a white paper talking about financial inclusion, where one of the issues was, sure, innovations can be good. They increase the speed and the convenience and the ease of doing transactions, but they might actually unintentionally lock some people out. And so, as people start innovating, as all you guys are doing the things that you're doing in terms of developing new products, one thing I'd really encourage you to do is think about, well, who might not be able to tap into this as easily as I might think? Who might not have infrastructure in place that allows for them to leverage the tremendous tools that you're developing? And what things might you do to change that, to really allow more people to have access to your services and your innovations and your ideas, so that it's truly a comprehensive and democratic financial technology system that we have.
Certainly you're hitting on a number of buzzwords. I mean, when you think about the fintech ecosystem, whether or not you're talking about crypto or payments or mobile payments or robo advising, there's this idea of democratizing financial services. It's a kind of a leitmotif or a theme that runs really throughout the industry and throughout the space. And what you're hitting on is this idea of, okay, well, we want to have a safer payments space, but we also want to have one that is more inclusive, in the sense that of it being able to advance, I suppose, a greater idea of economic mobility. When you think about that particular vector, right, that particular policy consideration, what are the key elements in the Atlanta Fed's plans, to achieve goals like advancing economic mobility and obviously resilience, against the backdrop of this safer payments innovation dialogue?
So, I mentioned the white paper, and one thing that I've really appreciated in terms of our effort is that we're drawing in people who have expertise and touch the financial system from many different parts. We certainly have a retail payments office. I talked about that earlier, but financial technologies are also quite relevant for banking institutions and how they interact with their customers. And there's an increasing group of economists and researchers who are trying to really understand what are the efficiencies of the marketplace? How do we describe the marketplace? Where might there be market failures or other things that might be leveraged to and maybe allow us to improve our policy and our infrastructure? Now, I mentioned the white paper, which was developed by Mary Kepler's group and the Retail Risk Forum. I need to give a shout out to Jessica Washington, who did a tremendous job with that, but also a number of other folks. And one of the things that we highlight in that paper is that people's conventional wisdom about how transactions happen often overlook some realities. So, for example, there are lots of folks who still use cash. And increasingly, when we get to these digital tools for making payments and doing transactions and all the things that we do, cash is kind of on the outside looking in. And so cash users will not be able to leverage that. And so we just wanted to highlight that as one potential hole in how our old system has worked that the new system may not be tapping into and filling. And we want to try to make sure that as many people as possible are thinking about, well, where are those holes? We call out one, cash users, and in the white paper we talk about a number of possible solutions for that. But there may be other holes out there, and I think it's a ripe area for exploration and examination for not just researchers, but also the private sector and entrepreneurs who are looking for opportunities to more effectively reach people and provide services that will be the dominant services of tomorrow's payment landscape.
So, what I find sort of interesting and in that particular answer, right, is that you're trying to identify sort of holes as you from your specific perch, as you're looking at all the people bringing to you sort of their gadgets and saying press this button and see what happens. Is that you're sort of having this look at payments as payments. And there's been an evolution and an accelerating evolution in what the mediums of exchange are in our economy, right? And you're sort of thinking to yourself, well, who could be left out as one goes from a sort of a cash-based payments world into a more digital one, and your white paper is kind of trying to grapple with that, and it's a topic that I think we may, if there's time left over, we can return to, but before even going there, what's striking is that conversation is a bit of a different kind of a conversation from, let's call it, the legacy conversation on financial inclusion, which involves bringing the unbanked into the mainstream banking system, right? But here you're focusing on the sort of the cash digital divide, and that's a little bit of a different kind of a question than from do people have bank accounts? So is this meaning that that's no longer sort of the getting the unbanked into the banking system? Is that no longer an overarching policy goal? And if not, then what is specifically your goal, again, when you're thinking about the financial inclusion question?
So, Chris, that's a really good question. And I got to tell you, cash users and being unbanked are clearly related. So if we could get everyone banked, the cash user issue would kind of go away. But I've been in economist in this field since, well, for a long time. I stopped calling out numbers because you can start to figure out the other things. And during that time, from the very first day I started working, the unbanked was a problem that we were trying to tackle. And it's now decades later, and the unbanked is an area we're trying to tackle. It's turning out to be an enormous lift. And the thing that I've been wrestling with my team about is, well, maybe can we solve this cash user issue without having to do that enormous lift? Are there ways that we might be able to leverage technology to make progress on this without having to move all the other factors that have made solving the unbanked and underbanked problem so enduring? And so that's one of the things that I've been thinking. Certainly, if we could get everyone banked, I'd be a fool to not support that. That just has proven to be a hard thing. So I'm really trying in my head to get thoughts around this can be a both and. This doesn't have to be a single pursuit or singular pursuit. And maybe there are other ways that are far less costly or difficult to achieve the same things. And there are lots of examples of where this is happening. So we know that in other parts of the world, and even in this country in some regards. There are utilities and tools that are allowing people to transition their cash or convert their cash into more digital payments to allow them to access without needing to have a bank account or any of that kind of stuff. And in order for this to work, we need to figure out how to get it to scale. And that's a question that we're trying to wrestle with. Just on this front, I think that I'm very excited because we're actually going to try to stand up, or we're working to stand up a working group on this to try to figure out what are the ways that we can use technological innovation in the payment space, in the fintech space, to promote more inclusion and more ability for people to access financial tools and services that will help them be more economically mobile and resilient. But it also might allow them to be more economically vibrant and creative, and bring some of their ideas and thoughts to life in ways that really transform perhaps payments, but other parts of our economy as well. So, I've spent a lot of time talking the last couple of months about how there are a lot of structural barriers to our economy that are preventing some really good ideas or potentially good ideas from getting to market and really helping us collectively be more resilient and more productive. I think that innovation in this payment space can be really one way to do it.
So when you identify some of the structural barriers, you're thinking, are you thinking sort of market structure barriers, or are you thinking regulatory barriers, ideas barriers, all of the above?
So yes to all of them. I think that there are some historical realities around how our markets have worked that have make it more difficult for some people to attach and really get access to capital. I think there are some regulatory issues that we have to resolve as we get a much more dynamic landscape. And we've been having conversations around things like digital currency and what's its role, and what sort of central bank mean in that space. And then just ideas. One thing that I've been humbled by, starting as an academic, I've had the pleasure to work with a lot of smart people. And there are many people who have lots of good ideas, and they're not all starting from my head. So I want to try as much as possible to give people from any walk of life an opportunity to come forth with a good idea, and have some reasonable likelihood that there'll be capital available to try to bring that idea to market, and let the consumers be the ultimate arbiter of what sinks and what swims.
One of the things that I have heard you said, when you think about the different kinds of sort of different barriers, is that you want to, well, it's frankly, it's something that I've said lots of times when people sort of ask me as a law professor, sort of policy questions. We have different kinds of options on the table. Do we do A, B, or C? And I kind of sort of tell people, there's a lot of uncertainty with lots of different things. Sometimes there's high upside, maybe there's high risk, maybe there's not. But one thing, particularly when you're thinking about things from the standpoint of financial inclusion, is that you want to give those people who have limited means access to the same quality of financial planning or management that everybody else, and particularly the wealthy, would have, and that should be like a bit of a guiding principle. And I've noticed that you've said and observed much of the same thing. What then would be fintech's sort of space against the backdrop of that kind of normative aspiration, almost a moral aspiration, to make sure that everybody has access, not just to capital, but to the same sort of financial tools?
Yeah, so I think there are a couple of aspects to this, and I worry a lot that we wind up with sort of a dual economy, where you have some people who start off with some resources and access to information and networks, and they get to run. And then you have other people who are not, and they're just crawling all the time. And I think that the promise of fintechs, the promise of innovation, is to create new pathways and channels to that information and to that capital, such that those who are crawling can very quickly start to walk and even start to run. And once we get everybody running, I think that makes us all so much better and so much stronger. I got to say, I've been very pleased that our bank has been working on some tools as well. We're not sort of entrepreneurs, so I don't want to get out of anybody's head like that. But But for example, when you think about some of the structural barriers, we've been doing a lot of work on something that's called benefits cliff, where we're building a tool to show that if someone is getting support, um, when they get $1 of extra income from trying to get some extra work, oftentimes they'll lose $3 or $4 worth of the support that they're having. That's a negative incentive for them to actually try to better themselves. And what we found is that a lot of people have not really been so aware about how negative an incentive that is. So we've built a tool just to open people's eyes about what the information infrastructure is, what the incentive infrastructure is, and trying to help people rethink the structure of these benefits so that we get people the proper incentives to get those ideas out there, to get better skills, and to get to a stronger resilience. That experience for us in terms of a tool that we're putting in front of policymakers at the county and state level and seeing their reactions and their willingness and interest in changing just leads me to feel super confident that like an army of these tools will create a sea change in terms of what's possible for consumers and for those who might have sort of a hope of entrepreneurship. So I really view this as a call to action for the fintech community to think about, well, what are all the new networks and all the new pathways to getting people access to information and capital that are potentially out there? Because we start to fill in that space and make it a thick space where it's not just 2 or 3 ways that you get access to capital, but 200 or 300 ways. There's no telling how productive, how innovative, and how strong our economy will become.
So we have about just about 3 minutes left over. So I'm going to ask maybe a kind of a meta question in light of all your observations that you've made in our time together. I mean, right now we've covered questions about payments, right? About literally what kind of tools should be used in order to consummate a commercial transaction. This evolution of cash, the utility of cash, the question of whether or not people using this particular tool, this particular innovation, may get left behind. We've talked about safer payments, right, and the safer process of innovating, where downside risks are included, and then we sort of come up with the last sort of bit of well, let's also keep our mind on enabling sort of the upside potential, at least when it comes to financial inclusion. From your perch, over at the Atlantic Fed, there's a lot of uncertainty, as you've already said, in a lot of these instruments. Some may work, some may not. A lot of times it's hard to gauge what that risk is. How do you go about sort of trying to learn and define, to categorize, frankly, a lot of this in terms of the risks and rewards?
Well, first of all, I want to say that was a great summary. One would think you were a podcast host or something. So,
I don't know.
That's actually very good. One of the things that we've really recognized at our bank is that part of what you have to do is have a deep understanding and appreciation for the landscape. What are people doing out there? How is it playing out? And then start to really walk with innovators as they move forward. So we are building those partnerships and relationships. We are out there and trying to engage. It's one of the reasons why I'm really happy to be here. I would encourage all of you to connect with us and let us know what you're doing and how you're thinking about things. And we can be a sounding board about what's reasonable and what won't fly as easily from a regulatory perspective. But we're also really interested in finding ways to partner with those who are going to run pilots and try things, because that'll give us all a deeper and richer understanding of how the marketplace works and what barriers are real barriers and what barriers may be just notional that are holding us back, but maybe should not. And so we're really trying as much as possible to get out front forward and engage. And I'm just very excited. Like, for me, our guys are really interested and energized to be a real player standing up in the fintech space to help promote and advance our understanding of how we do innovations that are safer, but that also tremendously broaden people's access to the so many tools that are important for a vibrant economy.
Raphael, thank you so much. This is a great conversation. I learned something, and I know our audience did as well. And I know your time is really valuable. Thanks so much for the conversation.
Chris, it's been always a great pleasure to talk with you, and I look forward to doing that in the future.
Thank you.